The most current Bitcoin news is that on-chain data indicates that the market for Bitcoin futures has remained active recently, even though investors have been using a lot of leverage. Following the increase in derivative activity, market leverage recently reached a new all-time high. The ratio between open interest and the derivative exchange reserve is the all exchanges estimated leverage ratio, an indicator. When this metric's value is high, it indicates that the typical investor is currently utilizing a lot of leverage on exchanges. Such a pattern shows that investors are currently willing to accept high risk. On the other hand, the low values of the indicator imply holders are going for a low-risk approach at the moment as they aren't using much leverage. On the other hand, Bitcoin and Ether are acting interestingly, so if you want to learn about all the updates in the market, then do watch the video until the end. Now, here on the screen is a chart that shows the trend in the Bitcoin all exchanges estimated leverage ratio over the last couple of years. As you can see in the graph, the Bitcoin estimated leverage ratio had been rising in recent weeks and hit a new all-time just a while ago. The value of the indication has, however, somewhat decreased since that time. This decline was brought on by the recent brief spike in market volatility brought on by the CPI data, which flushed out a significant amount of leverage. Despite the decrease, the indicator's value has stayed rather high, indicating that there is still plenty of leverage available in the market. On the other hand, talking about the second most popular cryptocurrency, Ether, many people eagerly await a substantial Ether price recovery. Unfortunately, it does not appear much will change in the weeks ahead as a rising bearish sentiment trumps the fresh lows for exchange deposits. It's interesting to observe the sharp decline in Ether transfers to exchanges. Many people hold Ether in profit, even though the majority of holders are at a loss. As no improvement is in sight, one would be tempted to sell at these prices. A decline in the price of Ether in the upcoming weeks appears to be somewhat likely. The Ether valuation has not changed as a result of the merge, however, this was partially anticipated. However, there has been a significant drop in Ether exchange deposits. For the week, the indicator fell to a new 2-year low. That level matches what was observed in late October 2020. Strangely, there are now fewer Ether addresses sending to exchanges than there were 23 months ago. That is consistent with the fall in exchange flows. Even though it does not indicate a market turn, it is fairly noteworthy to see both metrics reach 2020 levels in late 2022. On exchanges and trading platforms, Ether liquidity is still very plentiful. The price will not change either as long as outflows do not dramatically rise. But you guys don't have to worry about this, as reducing Ether supply is a good thing. Everyone agrees that the continual burning of Ether is a fact. That modification took effect through EIP 1559 and is still moving forward at full speed. With a network burn rate of about 1 Ether per minute, the issuance offset is 0.86x. Even while Ether's circulating supply is still far higher than 110 million Ether, it has therefore turned into a deflationary currency. Additionally, the merge has a favorable impact on this measure. Since the merge, Ether's supply would have increased by more than 379,000 Ether if it were still a proof-of-work system. However, just under 7,000 ETH entered the market on the proof-of-stake variant of the network. Under proof-of-work conditions, the 0.07% yearly supply rise is preferable to the 3.66% annual supply increase. And with this, let's hope more and more giant firms like MasterCard and BlackRock step forward with the support of cryptocurrencies. In another news, Meta, the company formerly known as Facebook, which produced a massive supply of investments in metaverse-based projects, is still struggling for its metaverse app Horizon Worlds to find its intended audience. The company that presented a video of full new avatars, including feet this week, was criticized due to the prepared nature of the presentation. The massive social media company Meta is having trouble after trouble with its metaverse app Horizon Worlds. The business purportedly displayed a prototype of the new graphical avatar presentation that the platform will include in 2019 as part of its Connect address last week. The inclusion of legs connecting these to the floor, which increased the metaverse's sense of immersion, was one of the major enhancements in this area. The business emphasized that this animation part was made with the help of auxiliary technology, including motion capture, to highlight what will be added to the app in the future after the presentation, which left some viewers perplexed. Some of the fans who criticized the firm for spending the majority of the money on this without fixing the leg issue were incensed by this statement, and they are now really concerned about user enticement and retention. Therefore, legs are not the main issue that Meta has with Horizon Worlds. The site is reportedly having trouble attracting new users and has dropped its target of amassing 500K monthly active users to 280K, according to a recent piece from The Verge. Even though the business claimed in February that the app's structure included more than 10,000 worlds, just 9% of these worlds are being visited by more than 50 people. Similar to how most users stop using the platform after a month, this statistic indicates that people are getting tired of what Horizon Worlds has to offer. However, Meta's workers are also abandoning the platforms in this boat along with regular customers.
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right, iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
So what do you guys think about the problems that Meta is fighting on its metaverse push? You let us know in the comment section below. Thanks for watching our videos. Please don't forget to like the video and subscribe to the channel if you are yet to do so. Till our next video, stay savvy.